I hate this.
We're live.
Are we live?
Yes, we are.
Yo, this is so weird.
Yeah.
Let me just put it out there on the record, y'all. My MacBook is straight hating, so I'm coming to you live from my iPad Pro. You guys know that I take notes on my iPad Pro. So this is going to be interesting. So y'all are just going to have to bear with us for this episode.
Yeah, it's but essentially we came forth with the best episode in which that we can. So we're here today. So we're down to the wire. How are each and every single one of you doing today? Hopefully you had a great day. Who was the first? How is it possible? Reggie is just like on it. Like,
I don't know.
just be here. And I'm like, I'm all for it. So let's just get some of the standard housekeeping out of the way. If you're new to the channel, go ahead and hit the subscribe button down below. I mean, you'll probably see it like over here. I think it's over here. I mean, unless it's mirrored.
I don't know.
I think it's
discombobulated.
over here. And if you've been here before, then, welcome back. And if you like what we do, go ahead and hit that like button. I guess YouTube's algorithm will help in getting this out to other folks. If not, you can just share it to your own social media. And we'll give you a few seconds to do that while we talk. And then on top of that, if you want to be in the know for when we're getting ready to, drop some content, which I think we should be dropping some content this week. So don't worry, we won't be
new content.
Yeah, go ahead and hit that bell. What did I say? Oh,
this week?
Okay.
Sorry, I'm like sharing on all socials right now because I always forget to do it. So I'm doing it right now.
Okay, so Jolene is like over there in the matrix, so we're going to give her a little bit of time. But for each and every single one of you, I mean, we're getting ready to be moving into the holiday season. So just to give you an idea, we will probably be letting you know what our schedule is for the holiday season. We'd like to take a break a little bit. I mean, so we're going to give you some content as we get closer towards that holiday. We'll probably, send you away with some homework for you to research until we come back. So don't worry, we'll keep you busy, but enough time to spend time with your family and loved ones. So we got an action-packed day today, but of course, Jolene, are you ready to get some housekeeping out of the way real quick?
I will be in 2 seconds.
Okay.
Okay, I'm ready.
All right.
What's up, everyone? This is Hot Take Thursday, and this legit feels like a super hot take because I normally have my devices ready to go, but today I'm on 2 iPhones right now and an iPad Pro. Do you know how hard that is? Like production, one day y'all are gonna see behind the scenes production of how many devices it takes to run the Come Up series. Okay, so this is. Let me just breathe. Woosah. All right. If I could have a goon hand on this technology, but okay, it's all good. All right. So we have the Dow. The Dow was positive today, 85.73 points. S&P 500 was up, S&P 500 was negative, negative 2.29, and then the NASDAQ was up, positive 27.82. Now, for the sectors, we have energy, real estate, and industrials coming in at the top 3. And then our bottom 3, communication services, materials, and utilities. I meant to check earlier how Facebook was doing. Anytime I see that communication services are down, I'm always like, what happened with Facebook? What'd they do? What'd they do this time? Okay. Now, for our picks, let me back up. There are 31 of them, and you can find... Shut up, Mark. Mark knows I am struggling without my iPad Pro. Oh my gosh. There are 31 picks. You can find those picks on our IG page, Instagram page at That Come Up series. There's 31 of them, 31 flavors, if you will, is what they've been calling them. Or 31 sips, actually. I think that was the latest one. 31 sips. All right. So we have Zscaler coming in at number 1, up 26.45 points, y'all, in one day. Look at Mark's face. Look at his face. Zscaler also hit a 52-week high today as well. Then we have DHI and Tesla coming in at the top 3. Then for our bottom feeders, we have Facebook, X as in steel, and then NEO. And we had a few 52-week highs today, Mark. So besides Zscaler, which, I know you're happy about, We also, SMH was at a 52-week high. Lamb Research was at a 52-week high. ARKK, same 52-week high. Hack was at a 52-week high. And let me see, I think that was it. Yeah, I mean, overall, most of their picks were green today for the most part, so that's good. Yep, SMH. Oh, Google was at a 52-week high today. And they pretty much, they maintained their position even in the aftermarket, so that's cool. Disney, shout out to Eliana and Johan. Hey, y'all. We got them at a 52-week high, and they're up in the aftermarket. So, I mean, overall, it was a pretty, good day. I mean, overall, when I look at it, then what did you say?
The song "Gonna Have a Good Day."
Yo, okay, so shout out to all y'all if you're in the super chats. Like, the funny thing is, normally I can see, but I can't. So that's a whole nother other. So I'm just assuming that y'all are.
They are lit.
Super chats. Okay, so for the 52, or excuse me, for our 7, I was going to say for the 52-week high, for our 7 picks, as far as our initiative called the Come Up Community, we have 7 organizations, and you all should know what those organizations are. And, normally I know a few of them off the top of my head. However, I don't have my notes.
Y'all know who they are.
Maybe we'll put them later on. I'll put them in the description. Just know that they are going to wonderful causes in the community that impact, a come up cousin somewhere in the world. It's impacting a come up cousin somewhere. So we're super excited about that. We throw the super chat dollars in a burner account to maximize it. So that's exciting. And then also, I do want to note that if you have sent me a organization that you want us to consider, we are closed for right now, but next year when we open that back up, please just resend it, because I guarantee you it is lost and flooded in the DMs. I'm sorry, but trying to keep up, I mean, everything's falling apart right now. Electronics are falling apart. DMs are falling apart.
I got you covered, because today we got some stuff to cover today.
Yeah.
Should we get into it?
We should. Yo, I'm even low on water, y'all. Okay, look at this. I got this last little. Let me take a little sip.
All right. So when I go into presentation mode, that allows you can step aside and go get some refill. Okay. All right.
Yo, we love you. We love you, because if this was any place else, I would have been like, I can't make it today, y'all. I'm sorry. It's a day, but here we are, rocking it. I'm ready. Let's go.
Let's do it. All right. So today we get to discuss fundamental analysis. Of course, I got Butter in the background, like making tons of noise, but I mean, I got this child's feet in my head, at the back of my head, so hopefully they don't kick me.
That's funny.
So, welcome to the first day of class. We went through our orientation a little bit earlier in the week, so as now we're going to get into some of the basics. So, just for those in which that are still getting caught up and getting ready to step into this world of investing, where you've been just sitting there just like tapping your toe into the water just to see what its temperature is and everything else, we're going to give you a little bit more of a taste and feeler of essentially how to understand the market. And it all starts off with the basics, the fundamental analysis. So, in studying the fundamental analysis, here is on our agenda today. So we're going to go over what is fundamental analysis. We're going to go over some business models. We're also going to discuss management and leadership. And then we're going to give you some examples. This should be fun. So hopefully each and every single one of you have your pen and paper ready. If not, we'll give you a second. Don't worry. Go ahead. We'll wait.
Y'all should come to class prepared. Okay.
All right, let's do it. Starting first, what is fundamental analysis? Fundamental analysis is a method in which that is used to determine the value of, they say a stock, but I like to say a company, by analyzing the financial data that is fundamental to the company. Topics discussed include the balance sheet, income statement, and cash flow, of course, with a few other things, which we've got a surprise for each and every single one of you at the very, very end of today's episode. All right.
Yay.
Yes, we love surprises. If not, we'll just hold on to it next week, just depending on, what the vibe is. I'll just say that 2,500 viewers before I get there, I'll share the secret. How about that? All right, so let's see here. When we think about fundamental analysis, if that was just a whole lot of words, then really just think about it like this. Fundamental analysis of a company is literally just the health checkup of a company. So it's like literally you're just doing a physical just to check for specific vitals, just to make sure that the company itself is healthy. So with that in mind, it starts always with cash. I mean, of course, if you're in business, you're here to make cash, right? So what are some of those elements? Well, first off, cash flow statements. Now, we're not going to get into too much of the weeds as it pertains to like cash flow statements, income statements, balance sheets, and all that other stuff. We'll get into that a little bit later. We're just giving you the brief synopsis because one, it's Thursday, plus we've got quite a bit of information to share with you. And then on top of that, it's just like, we don't want to completely overload y'all because some of y'all are saying I'm giving you too much where you're stuck. So the whole goal here is for you not to have analysis paralysis, but to give you a feed so that way you can look this stuff up. Now, you can look up income statements, you can look up balance sheets, you can look up cash flow statements on any company that's publicly traded. If they're publicly traded, then those things should be available. And some of the resources that you can go check out, actually, one of the main resources that you can go check out is Zacks. Another place that you can look at is for any company that you're surveying, you can go to their investor relations on their site, and that information is publicly available. You don't have to pay for it. It's right there and ready for you. So cash flow statements, they measure how well a company manages its cash position, or how well they manage their money, meaning how well the company generates cash to pay its debt. So if they have debt obligations, are they able to make those debt obligations by paying them off? And fund its operating expenses. So we hear about this a lot. For example, when you think about operating expenses, we talk about if it's a software company, the software development, all that other stuff, those are expenses. Anything that comes into the door, I'm not gonna jump the gun. Anyways, the main component of cash flow statements are cash from operating activities, cash from investing opportunities, and from financing activities as well. So when we think about, for example, operating activities is pretty much just as it is. Like, for example, if I'm a business, if I sell lemonade, then ultimately it's going to be for my operations, which is selling lemonade. If it's investing, say, for example, if I invest into something else, then ultimately I should be collecting dividends from those investments. And then that's also coming in as cash flow. And then if I'm talking about financing activities, you kind of get the gist. So here's a wise little piece of sage advice. Never take your eyes off the cash flow because it's the lifeblood of a business. So you can't have a business without cash. Just imagine it. Just imagine if your business was literally able to somehow survive without cash. That's just impossible. It's not going to happen. So, we know who quoted that, Sir Richard Branson. So let's get into it as it pertains to the next piece. In order to generate that cash, let's talk about business models. It describes how your business makes money. Now, if you need a little bit further in depth, an explanation of how you deliver value to your customers at an appropriate cost. Now, we're going to do a little bit of a deep dive into that today. So when we think about business models, right, it's like whenever somebody is asking you if somebody came to ask you for money, one of the main things that you would ask is, well, if you want me to invest in your company, well, how does your business make money, right? Easy peasy. So look at it in the form of three parts. So we look at it in first off, the cost to make. So everything it takes to make something, from either the design, the raw materials, manufacturing, yada, yada, yada. So that's the cost to make things. The second thing is the cost to sell. So that's what it takes to, say, for example, sell it. So for example, if you have an app that's ultimately going to collect revenue later on down the road, you got to think about it in the sense of how much did it cost you in order to build it? And then on top of that, how much did it cost you to market it? And then when you get to the actual, when you actually bring in the revenue, that's when we start looking at who pays for it, right? So when we talk about who pays for it, it's pretty much how and what the customer pays, whether it's the pricing strategy, payment methods, payment timing, and so on and so on. So when we think about it, let's give it as an example. Let's take, say, for example, a home builder. So the cost to make, we know that there is tons of raw materials and everything else, as well as labor. So those are all your operating expenses. Then we talk about the cost to sell, the cost to market, so pretty much in order to sell this home, you're going to need to probably put it out there in the market, and you're probably going to have to list it. So now that you built the home, you already have your cost there. Now you have to put it on the market and ultimately market it out to other places. So you'll probably have to pay small fees here and there to have it listed on some type of marketplace. Okay, then the next thing is who is going to pay for it? So that's ultimately going to be your customer. And those are going to be the people that step in and buy it. Now, when you take what it was sold for and then subtract, say, for example, the cost that it took to sell and the cost that it took to make, therein, we either have profit or you sold it at a deficit. Now, when you're starting off as a business, most businesses, when they first start off, one of their most fatal mistakes is they always want to look to be profitable by the end of the year. And most tech companies, like that are inexperienced tech companies, they think that they need to be profitable. But most of the time, if you're taking on any investment or any of those types of things, then most likely you're not going to be profitable. I mean, it just is what it is. And the goal is when you show investors, you just have to show them the trajectory of your growth, of what it would take for you to be profitable, as well as becoming a solid business. So the next thing that we look at outside of, say, for example, and I know I'm skipping through a few things, but don't worry, we'll kind of cover those things in another segment today. So when we think about it, the other piece that we look at is leadership. Leadership matters. It will always and forever matter. Now, for example, it comes down to three real key things. Now, of course, you can add in a further list of some other things to this piece of the pie, but let's look at it like this. Well, the ability to lead. Meaning, do you have the ability to motivate and inspire others? Know how to connect and engage with employees. If you have no connection to your employees, or if the business or the owners or the management has no connection or ability to engage with its employees, then it's pretty much going to create a disconnect. If you can't motivate and inspire others, then what's going to motivate them to get behind to do what they're doing and ultimately be able to make more beautiful products? So the other thing that we look at is always coaching and conducting. So with businesses, there's always the ebbs and flows. Things fall apart all the time, and it's just a matter of essentially how those things are managed. It's also going to be a matter of how is it that you coach people? How is it that, like we said, how is it that you motivate them? So the other part to that is know how to coach employees so they can develop their skills and improve their performance. Remember what we just said there, their skills and improve their performance. That's one of the main things in which that you're doing. You're bringing out the best in every single person. Do the companies that you look at, do they do that? And then the third thing is, it comes down to vision. Have a clear vision and know how to effectively communicate it in a workplace. So many people come forth with ideas. And especially when we think about new companies or new aspiring entrepreneurs, they have great ideas. And the same things revolve in the publicly traded marketplace. They have great ideas, or they're already working on a great idea that has already been successfully baked because it's made it to the publicly traded market. But even when you're at the publicly traded market and you've gotten bigger, it still doesn't mean that the expectations don't stop. They expect you to keep going. For example, when we look at Apple, we look at Steve Jobs because of the vision in which that he put forth for such a company. But that vision didn't die just because Steve Jobs is no longer here. The vision has continued on, and in different forms of iteration. And hence the reason why you have a CEO in Tim Cook. He may not be a Steve Jobs visionary, but he's carrying out these three specific qualities in which that motivates employees to want to do more. And he's also bettering their skills as it pertains to the management and leadership around him, in which that he's motivating them, and then they go on and motivate the folks within their specific divisions. Thus, the company essentially still creates and is a cash flow generating machine. Notice how we said cash flow? Okay, so I think maybe, just maybe, just a little bit, if I may, if that's okay with you, Jolene,
It is. I had to break out an actual paper journal.
Oh, wow. Wow, that's interesting.
Taking it back, y'all. Taking it back.
So we've been hearing about a lot of you talk about, say, for example, a company that is planning on going public. Now, since I can't really do very much as it pertains to talking about some of the things that are happening now, I felt like, well, why not talk about some of the things in which that have happened that really got my interest in wanting to invest in the company early on. Well, not too early, but so let's take a look at them, shall we?
Mm-hmm.
And that company is Airbnb. Here's a pitch deck. Now, what we know of pitch decks are simple presentations in which that when you're looking for investors or when you're looking to garner investor support, you use these things so that way essentially, hey, now the investor has a clear and concise idea of what is it that your business does, where is it going, and the whole nine. So let's see, we're going to run this as a demo and just see exactly how many of you are actually able to pick up, for example, what is it that this company does. Now, of course, spoiler alert, many of you know who they are, but let's just take it for example and just start thinking like investors. So each and every single one of you are the investors. So let's first start off with, as a start, like any company, you start off as a startup, you look at a problem. So each and every single company, whether private or public, they're looking to solve a problem. So you have to ask yourself, what problem is it that currently exists? So here's the current problem that they came up with. Price is an important concern for customers booking travel online. Hotels leave you discounted from the city and its culture, or disconnected. And then now there's no easy way to book a room with a local or become a host. So pretty much meaning that if you really wanted to feel the pulse of the city and feel connected when you actually do your travel and leisure, then there was a huge problem because at the time before Airbnb, then there was a huge disconnect. Okay, so we get the problem. So here's the solution. They at the time provided a web platform where users can rent out their spaces and host travelers to save money when traveling, make money while hosting, and share culture with a local connection to the city. Now, I know I just said a lot there, but notice what we did there. They share, make, and save. Now, notice this. Price, disconnected, not easy. Those were the three problems. Here are the three solutions in which that made Airbnb. So now let's look at the validation part. Now, when we look at validation, we think about it in the sense of the market. So when they first started out, they had 660,000 listings on temporary housing sites, like, for example, couchsurfing.com. And then at the time, there was temporary housing listings in New York City and San Francisco Craigslist for 1 week at about 50,000. So that was already showing you that there was already a lot of folks within the marketplace that were already looking to, say, for example, open up their doors and allow people to stay there. So they were already doing this as a money generating process. Well, this became their market at the time. So when they looked at it, when they said, okay, hey, trips booked worldwide, total available market, they said 2 billion. Now, this was early, very, very early on in the day. Now, from that 2 billion, they said out of the 2 billion people that booked worldwide, 560 million budget and online trips serviceable area market. So this was their SAM, their serviceable available market. And then they thought about it in the sense that where they said, okay, hey, trips with Airbnb. They kind of like forecasted at the time early on of about 84 million out of that 560 million that represented that $2 billion market cap of their market share of Airbnb, of what they believed that they could take. So you see how we did that? Let's say, for example, if we remove Airbnb from the stage, and let's take, for example, let's say Apple. Now, Apple's market, let's say, for example, today represents $2 trillion, or let's say the total market looks like, say, for example, $15 trillion as it pertains to, let's say, smartphone and devices market. Of course, I'm rounding numbers here. And then let's say out of that, we say, okay, hey, then it represents maybe a $5 trillion opportunity. And then from that, then ultimately Apple says that, okay, hey, we'll take maybe about a $1.5 to $2 trillion market share from that. So the Airbnb product is simple. Now they're explaining how it works. You search a location, review listings, and then boom, you book it. Notice that they just explained to you their business model. Business models should be very simple and easy for folks to understand. So when you think about it from a publicly traded market standpoint, you should also be able to understand, if you're looking to invest in a publicly traded company, you should also be able to understand exactly what the business model is for the company that you're looking to buy stock in or trade. If you don't understand these things, then I highly advise that you do not do these things. Now, of course, for all disclaimer purposes, I'm not a financial advisor. All this information, yada, 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 should only be used as educational purposes as well as entertainment. If you feel like I entertain you. So let's get a little bit further into the business model. They say that they take 10% of every transaction. Okay. So they share of the market, there's 10.6 million trips with Airbnb. Okay. So the average fee is $20, $70 a night for an average of 3 nights. So if you think about it, 10.6 million trips with Airbnb, $20 average fee, which equals $2.1 million in projected revenue. Now, this was as of 2011, just as a heads up. So just so you know, you're looking at a decent little pitch deck here. If only I was VC Mark in 2011. All right. So then they say market adoption. So when we think about this also, we think about this all at the same token when you look at solid companies. So when they think about it, events target events monthly. So their thing was they looked at areas in the cities and areas and cities in which that they had major events. And from those events, they looked at it in the sense of what type of people would it draw. So, for example, you have the Euro Cup over 3 million, Oktoberfest 6 million, Summerfest 1 million, and Mardi Gras was 800,000 people. Now, when you put that into perspective, some of these people are going to need to go somewhere and they're going to need to stay somewhere, and they're probably going to want to be close within the city. So when we think about market adoption, we think about, okay, hey, what are the opportunities for folks that are in the market to ultimately want to adopt the product or the service? So here we have it. So let's look at it from, say, for example, a publicly traded company side. Let's look at, let's say, a Netflix. So with Netflix, they'll probably add in a seasonal factor just like these, except that they'll focus it on, say, for example, areas in which that people like as it pertains to market adoption. So they realize that essentially that more people spend more time binge watching on TV shows. So if you spend more time binge watching on TV shows, and with the data that they collect, now they're able to understand, okay, hey, say, for example, Stranger Things is at 3 million plus. They'll say that, say, for example, The Crown is at 6 million, and so on and so on and so on. So with that market adoption, now we're starting to understand exactly who's adopting it and essentially where they are. Now, of course, you can't have business without partnerships. Nobody ever makes it successful alone. So who did they start to partner with as it pertains to cheap alternative travel? They partnered with Kayak, Orbitz, and Go Local. Simple. With that, when you partner, essentially it puts your platform or your product in the faces of other folks through, say, for example, another company. Well, we see this happen all the time, right? Like, for example, when we look at Amazon and its partnership with Intel, as well as its partnership with AMD, that's driving exposure to these two companies and essentially letting them shine. But at the same token, Amazon is significantly benefiting too, because they're getting powered by the tech. You see what we did there? Which is allowing those two companies to gain market share and adoption. So then let's look at it in the sense of, let's say, Craigslist dual posting feature. So when originally they had Craigslist and Airbnb. And then you got to look at the other part, the competition, of course. What good is being in business if there isn't no competition, right? So when we think about it, they put it on, say, for example, a level. Now, this is something that everybody should pay attention to, because on one side you have affordable and then you have expensive. So there's levels to this. There's wide ends of the spectrum, whether you're affordable or expensive, or say, for example, online transaction or offline. And the cool thing about it is essentially is like they give you like ranges and they kind of create like quadrants. And you can kind of do the same thing when you start looking at any company and then literally start comparing, say, for example, the spaces as it pertains to what's in that sector. So for example, if we're looking at tech companies within, let's say, software or let's say hardware, well, the first thing that you're going to do is if these are companies that are competition to, let's say, Apple, or let's make it even simpler. Let's come into semiconductors. Let's say that we're looking for competition to NVIDIA. So then what we're going to do is we're going to draw a line from affordable companies to draw a line from affordable to expensive. So when we look at the type of products in which that they sell, we say, okay, hey, these products are less expensive. These products are more expensive. Now, NVIDIA would probably be at the top line of the spectrum. Now, depending on the business model, this is where the verticals start to change, whether it's an offline transaction or an online transaction. You can really start to look at it as it pertains to the type of business model that they have, and then put it into that part as it pertains to the vertical stream. So when we think about it, keep in mind, y'all, this is during 2011. This is a 2011 presentation. So this is very, very early on as it pertains to who Airbnb was. Now, as you can see, there's multiple companies here that are inside the spectrum. And then over here, Airbnb came close to, say, for example, some of the more expensive areas. I don't know about hostels.com. Maybe that's just another hotels.com, maybe just as an accident. Who knows?
No, people do hostels.
You said what?
I said people do hostels.
They do. So let's look at it like this. Now, once you understand your competition, now you got to start looking at it in the sense of what's your competitive advantage, or like we like to say, what's your edge? So if we look at, let's say that we look at cloud spaces, right? Now we know that there's a bunch of cloud service providers out there, but now we got to start looking at it in the sense of who does something better. Now, if you have a specific company that you are looking to go after, we're not going to say any names. But if you're looking to go work with, say, or invest in a company that is within a cloud service, then on top of that, you can look at, say, for example, what is it that they provide versus, say, for example, what do their competitors provide? And then essentially looking at, say, for example, the competitive advantage. Now, of course, we look at these things a little bit differently than we look at it from the publicly traded side, from the startup side. And the startup side is more so in the sense of how much market share are they going to start taking up from, say, for example, those competitors. Now, that is also true when we look at, say, for example, the publicly traded companies, right? Because when we look at, let's say, the semiconductor space, Intel reigned supreme when they had a huge advantage over everybody else in the marketplace when it came to, for example, dominating in the server and data center space. But they got a little bit complacent, and then there were some other companies that started spending money in R&D, and they started taking more chances, and then now they're in the space. Now, once a 96 or 98% market hold now looks a lot like 80% market hold within a short span of years. So that's letting you know that they're building a competitive advantage, and that competitive advantage could be multiple things. Some people like to think first to market, first transaction based temporary housing site to go to market. Okay. Host incentive. They can make more money with couchsurfing.com. List once. Post one time with Airbnb compared to daily on Craigslist. Ease of use. Search by price, location, and check-in and check-out dates. User profiles. Browse host profiles and book in 3 clicks. And design and brand. They just said that ultimately that their design is more memorable. Will launch at historic DNC to gain share of mind. Wow, that's bold. And then remember what we talked about as it pertains to leadership, right? So leadership does matter. When we think about it in the sense of, they said, meet our team. So they say user interface and PR. So of course, he has a little bit of street cred. Now, of course, let's not get too highly locked into the faces here because we know that they don't look like ours, but it's okay. So then we look at, say, for example, business development. Okay, boom. When we look at, say, for example, the developer, boom, including he has relevant experience. That most of these guys have relevant experience within their space. And then on top of that, it's like now it's just about in the sense of what does the rest of the world think about you, of course, within the press and user testimonials, which honestly, nobody really cares. And boom. So when we think about it, right, we kind of like look at it in perspective of essentially, maybe private pitches and pitch decks aren't that quite different when you kind of look at, say, for example, publicly traded companies. The only difference is that you kind of get an understanding of the narrative a little bit better when you look at it from, say, for example, a private company. Now, if every publicly traded company had a pitch deck, that would be dope. But unfortunately, they don't. Now, the cool thing is that essentially where we look at it now is because they've already been validated within the private market because they're now in the publicly traded market. We got to look at it from a different glance of eyes. Now that we understand these types of things, which kind of gives us a narrative and what to look for, we start to look at that. And the first thing that we start is in the fundamentals. And then looking at their cash, looking at their financial statements and everything else. That gives you a first key glimpse. Then looking at the who's who that leads the company. Who's the leadership? Then we start looking at how is it that they're competing against their competitors in this marketplace. Those are just the simple starts. And as you keep going down this path, it'll send you down a rabbit hole as it pertains to keep going further and doing some digging. Now, of course, let's look at it from a simple perspective. There's a company called NVIDIA, right? We talked about them, and we kind of mentioned them a little bit in their pitch. Now, when we think about it from a fundamental standpoint, a lot of you are like, okay, well, hey, I've heard of this company, NVIDIA. No, it's NVIDIA. But the cool thing about it is, I think many of you have probably never seen exactly what NVIDIA chips look like. So, and an idea can start as just as simple as, say, for example, a simple chip. So when we think about this, let's do a little bit of a deep dive here just to understand the company. You see all these things here? These are all, like, say, for example, suppliers that work with them. But the main big idea comes right here. This chip here is the fundamental key component of a company that's worth multi-billions. Like, think about it. This single chip here literally not only powers this graphical device in which that provides HDMI and gaming power and also creative editing power, but the same chip also provides that power in data centers that power many of your apps. It also is the same data chip that powers real-time AI and artificial intelligence and machine learning that will one day power cities. It is the same AI technology that worked with Tesla. This chip alone is more powerful than, let's say, 5 chips that go on the CPU side. So what I'm literally holding in my hand is like a supercomputer. Kind of crazy, right? And yet, like, because when we think about like supercomputing power, for those in whom that are trying to understand, this graphics card, when it's actually plugged in and literally hooked up to all of this, which I've graciously taken apart for a specific project, this graphics card here is able to process tons and tons and tons of graphical image in real time, whether it's 60 frames per second, 120 frames per second, or sometimes even up to 240 frames per second at like just low latency, but yet at the same token, decent graphics of either 1080p, 1440, 4K, and sometimes 8K. Just think about it. All those images, all that compute power, running all that at real time. Now take that same type of compute power and use it to solve computational problems that can ultimately help solve world hunger or to ultimately make cities more efficient. You see, in the business model, it starts all from the chip and knowing the understanding of what the company is and its architecture. Now, of course, you don't have to study software and computer architecture. The beautiful thing about it is they have conferences in which that they talk to you about it. Now, I'm not telling you to go out there and be a genius and everything else within the sector, but what I am telling you is this comes from the fact of getting to know, say, for example, who the company is and what is it that they do.
So let me just, let's back it on up a bit. I do want you guys to realize like what just happened, because it almost didn't happen. Mark was in the middle of actually putting that graphics card together into his supercomputer. And when he showed me the actual graphics card, I asked him to show it to you all. And so that meant he had to stop something that he really enjoyed, put it on pause for several hours just so he can show you, because it goes inside. You wouldn't be able to see it. So, you know, like I said, we be listening. I know you guys like visuals. So that was like the perfect visual to show you all. So I hope you enjoy that.
Well, I'll give you an example. For example, like you see the chip here, but at the same token, and forgive me if you see Steve, but it's the same chip that powers this device here, which literally allows me to do some of the pretty cool things in which that I do.
So again, you don't have to know the nitty gritty. And I think that's where the overwhelm is coming for people. You don't have to know everything. The key things that we went over today are the things that the basics that you need to know. And then as you know the basics, then you can layer it with more in-depth, you know, knowledge. But knowing how a company makes money is essential. That's the business model. And then also another key part, I don't know if you guys caught it, but when we're over there talking about the leadership portion, the experience is relevant. So, you know, one of the examples that Mark likes to give, although I feel like we should give them some like chilling them, but whatever. You know, the leadership of Little Boy Blue versus AMD versus NVIDIA. It's just different. They're engineers leading. That's relevant experience. And not that an MBA isn't relevant, but then when you're thinking about competition wise and edge wise and all that stuff, those degrees and all that, that experience starts to matter even more so. So that's also something that is important to keep note of. And then also,
Jolene, you're gonna need to get some sunglasses because I caught that one, and I'm not sure that everybody else did. So I'm gonna wear them for you because
okay, you do that.
We're taking open applications.
I cannot. And then also, so here's some homework, y'all. And this goes for OG Cuzzles too, because let me tell you, if you thought this was, you know, oh, I already know that. If you can't apply it and if you can't teach it, you don't know it. Okay, so let's back it on up and let's just remain humble, y'all. Let's just remain humble. And what a key, something that you can consider doing. So you know how, thanks to the leadership of Cousin Tebow and Cousin Rashid taking on the initiative of the 31 Days of the Come Up series, where we go over all the picks, right? So you get a snapshot. Now they're already doing majority of the legwork for you, but you can take, and matter of fact, this is what you should do. This is homework. Take each of those companies and go through this presentation and make sure you can identify those key things. Make sure you can identify how this company makes money. What's their business model? You know, the leadership, like literally take it through this deck that we just went through and make sure that you understand that, especially for the companies that you're investing in. And then, you know, just as a way to just keep sharp, go through the companies that you're not investing in because you may find an opportunity. That's also something to keep in mind. And then also consider what the strategic partnerships are. That is another competitive advantage. And it's also, keyword, leverage. When you can partner with a company in a way that is strategic, that furthers your business and also furthers the business of the company that you are partnering with, those are powerhouse moves. So when you see companies starting to do that, because there's a difference between, oh, I'm just going to acquire this company and take over versus, oh, this is a company that I recognize as another leader in the field, and we're going to collaborate, or we're going to partner in order to achieve some end, versus I'm just going to buy this company and take over. Not that one is better than the other, but it's just different thinking, there's different perspectives when it comes to furthering your business. So keep that in mind as well. So let me, you know, Mark.
Something else, like, you know, or do you think that they're not ready for it?
I mean, I think that we can show a little something, but you know what I do want to say that this kind of like bringing it back is so important, especially as people are the cousins are starting to talk. They're building up their confidence and starting to talk more and more to their friends and to their family with their chest poked out and like showing some type of receipts. So when you can talk confidently about this, that is key. So go over these slides, go over the orientation from last Tuesday, and then go over these slides and just practice talking confidently about these companies and about investing. And then also, no matter where you start, no matter how humble your gains are, show the gains, because the green is what speaks. I don't care what nobody says. When you can show, like, look, without any labor, without any physical labor, this is what I made today, or this is what I made this week. It matters. It clicks. Like, people need to see that. And especially when you start thinking about who you want to build wealth with, they need to know, especially if they're scared or there's any fear, they need to know that you're in it and you're winning. So I think we could show them a little something.
You sure? Because I mean, we can wait till next week. I mean,
well,
what do you guys? You guys think that we should show it to each and every single one of you this evening?
We got a little bit of time. I think so. We'll give a little taste, and then we're cutting off the stream. So mean. But okay. You know, let's go for it.
Alrighty.
They said they're ready.
Well, everybody says they're ready, and then next thing you know, it's just like bonnet blown or, you know, mind blown. So okay, let's do it.
All right.
Introducing to everybody a website called Well Wisdom. Now, can you still see the screen, Jolene?
I can. Mm-hmm.
Okay. So Well Wisdom is pretty much a site in which that it gives you a few tools. You can use it to pretty much track some holdings here. And you can also track some of those 13F filings. Now, here's the thing about 13F filings. Managers can be private banks or trust or insurance companies, investment advisors, pretty much institutional money. And they have to submit their list of qualifying securities no more than 45 days after the quarter date. So pretty much 13F filings for September 30th through 2020 quarter are due November 16, 2020. So it's already happened. So that time has already passed. 5,427,000 or 5,427 filings already imported. So what can private investors learn from these filings? Plenty. Hedge funds have access to levels of investing talent and capital far beyond most individual investors. And then on top of that, the data of any value after, but is the data value of any value after 45 days? And that's so true, because despite the lag in time, the fact that we know the holding data is still valuable when it's released. The key is to focus on the funds that tend to hold securities long-term and have a higher concentration of conviction picks. Right? Well, since everybody's been talking about this company for so long, you know, maybe we should do somewhat of a deep dive into it. So we know this stuff from, say, for example, Tesla's movement and XYZ. It also gives you some Y chart data, which ultimately, if you use Y chart, you actually have to pay for it, but it's actually here for you. So shout outs to this platform. And then on top of that, it lets you know, say, for example, if there's any SEC filings and all this other stuff. But let's just get to the nitty gritty. So here are the SEC filings from Tesla, in which that were submitted and put it into a table format. And it also lets you know the total calls and total puts against the stock with all filers, as well as, say, for example, prior. So it's letting you know that there's been a lot of short seller activity, which there always has been in Tesla. And then on top of that, when we look over to hedge funds, we kind of get like the same thing as it pertains to puts and everything else. So it lets you know that they're down by about almost 9.5% or a little bit over 9.5%. So I'm going to keep going. So then we also have some news and our other reporting analysis as it pertains to, other companies, but we're going to get to some of that institutional ownership. Because with this institutional ownership, it tells us exactly what is it that they have been doing and if it's also an option in which that they're trading. So it also lets us know. So if we go to, say, for example, the date reported, we're going to adjust this date reported. Now, as you can see here, we can actually see that there's been some movement here. So, for example, there's RNC Capital Management, which is a small holdings LLC that they had bought 1,500 shares of, say, for example, Tesla. So their change in shares is pretty much this is their newly acquisition of Tesla. It represents a small fractional percentage of their ownership, but at the same token, it was reported in their filings. Brinker Capital Investments has increased, but here's other ones. Like, for example, you have Elephas Investment Management, so which means that they have 739. So they gained in value as it pertains to change in shares, 100,000 shares. So just for everybody's, I know people are getting ready to be tripping in a second, so let me go ahead and drop that in there for everybody to pay attention and follow along. By the way, thank you, Jolene.
You're welcome.
So now let's get to something where it's like we can see the changes in market value. Now this is where it gets a little bit interesting. So, Jolene, Susquehanna has a call and a put. They had one as of November 16th for Tesla. So they were hedging this entire time.
Interesting.
And notice the changes as it pertains to market value as well as changes in shares. Now it represents 4 and almost 4.5%. Another one's a little bit higher as it pertains to a little bit over almost 5.5% as it pertains to their portfolio. Now their prior portfolio was only at 3% and 4%. So they've kind of like, these have been their main holdings. Yes, of course. They also trade significant. So then let's go to, like, say, for example, Citadel Advisors. You guys have probably heard about them. Now, the other interesting thing is you have, say, for example, Elon Musk, who has gained in, say, for example, value. But I mean, this was kind of like probably like an older filing. So we have to keep it honest in the sense of the dates. Now, the cool thing about it is like we can like kind of filter it to new. So now here are all the new positions in which that are there. And it lets us know the source date, and it also lets us know when it was reported. Now, of course, this is just a taste, y'all. Just a taste.
Just a little sample.
This is not in, so this is also based upon 13F's filing, so you can also get a sense of the heat map as it pertains to where is it that their money is. So obviously, there's a lot of activity that's in Peloton as well as Zillow, NVIDIA, Jag, Alibaba, Facebook, and then of course it kind of like gets a little bit colder over here. Interesting.
That is interesting.
Yes. So then we can also see, say, for example, things as it pertains to trend charts. And we can also get an idea as it pertains to sector allocation.
That's a nice little chart.
This is very much so interesting. So it's like, I don't want to get too much further into it because of course we could just go for it on and on and on. But essentially, if we really wanted to, I mean, we can kind of see where consumer discretionary is playing some significant things here. And we're starting to see some upticks in consumer discretionary, but I ain't the one to gossip, so you ain't hear that from me. But if we remove also technology out of the spectrum, then you can see exactly how much of a dent they're actually making. So it's kind of letting you know exactly, where things are headed. And it's also letting you know like where the increase as it pertains to where their holdings are. And, I'm just leaving it there because clearly we can see at this point in time, we are also seeing that, okay, hey, finance or energy is now at 2%, whereas it's at 19%. But, I'm going to just leave it be. For this evening.
Yeah, I think that's appropriate. You all get to dive deep into well wisdom. And again, take the 31 companies, put them in there. Look at those filings. Look at the different charts. Like really start to immerse yourself rather in this material, but in a way that doesn't overwhelm. Okay, like take your time, backing that up, set your research hours, because now we're talking about like what you can actually do in your research. And if you don't hit all of your, if you don't get to everything you had on your list to research, it's okay. Roll it over to the next week. Take your time. And whatever you learn, make sure you can teach it.
Now, here's the interesting thing. Remember what we said as it pertains to like ultimately giving up the data?
Mm-hmm.
Like, it's a funny thing. Most of your investors don't know where to, they don't, like most of your retail investors, they don't know where to look at this data. Unfortunate. But now it's like you know where to look. So now it's like there's no excuse to say, well, okay, for example, E-Trade moves a little bit slower and some of these other sites do. Now, for all intents and purposes, yes, it can be a little bit interesting as it pertains to costs. I think it's like $300 or something like that. But here's an interesting thing. If you sign up for the site, and essentially, mind you, I have no investment in this site or in the company, so this is all just information, and they provide something pretty dope. So if you want the information, and they give you some stuff even further, because they even allow you to back test things based upon the 13F filing. So that's pretty interesting because you can run back tests all the way back to 2001 up until now, and also for the future. So you can do that by, say, for example, using the paid version. I think it starts off at 300 and then 500. But if you also sign up before you even do just sign up for an account, they'll actually email you a code, a promo code, and then you can apply that promo code towards your purchase. And then, so for example, I was supposed to pay $500. I only ended up paying $375 for the pro version. True story.
Nice. So remember on Tuesday, y'all, when there was that stat that 98% of retail investors lose their 100% of their portfolio.
Mm-hmm.
Thinking like an investor, like seeing how the institutional money moves will prevent any one of us from being in that 98%.
Mm-hmm.
So again, that's really key. Oh, and also, Mark, I know you must have saw this, and I just wanted to address it before we close out. Today, okay, did you get tagged? I'm sure you did on Instagram, and a bunch of different stories. How I believe it was CNBC was talking about the Roaring Twenties, and I saw a lot of different messages in my DMs from some cousins expressing that kind of historical fear of like, what if they try to take this from us? And I just let them know that they can't.
You want me to speak on it?
Yeah, I do want you to speak on it.
That leads into my benediction.
Perfect. Right on time.
So I hope that you guys enjoyed today's show, though, that it's like, we were kind of like rushing and doing the very best that we could to bring you like always like the dopest and freshest information in which that we can, that we find value. So my theme for this evening is pretty much, if knowledge is power, and if the root of all money is evil, then study hard and be evil.
Okay. Say more.
Study hard and be evil. And here's the reason why I say that, is because of the fact that essentially nobody was checking for you to ultimately come and give you free information. Not one of these institutional banks or institutional firms. Not even your own company. They were saying, hey, let's pay you the most amount of money possible so that way you can be the best you can. They're not doing that. Now, a lot of folks are saying, well, hey, that this could be taken away from us just like Black Wall Street was. Well, there's just one little problem. You change the rules for us, and essentially we're going to stay knowledgeable, but you change the rules for us, then that means that you also have to change the rules for the other folks who don't look like us. And that's essentially the reason why I love this game. And I wish that ultimately our ancestors had this opportunity, but unfortunately they didn't. But yet we do. Now it's just a matter of taking the time to study and ultimately execute. Because now, here's the thing. What separates you from them? Is it because of the fact that they wear maybe a fancy suit? Is it because of the fact of the color of their skin? Is it because of the fact that they went to some fancy college to study, say, for example, finance? Do you really think that that's what's stopping you from ultimately going out there and dominating them and dominating this market? If you do, I don't know. We've got a lot of work to do as it pertains to building up that motivation. But if common sense is starting to kick in and starting to allow you to say, hey, there's really nothing that separates me from them other than just my ability to just go sit down and study and utilize these resources that are at my disposal, then great. Because here's the reason why. The laws keep them honest. And then the fact of the laws keeping them honest, there's other watchdogs that are out there that are ultimately keeping them honest. And so that's the reason why we like these 13F filings. Now you have a platform in which that allows you to do that. And all these things are perfectly legal. They're resources at your disposal. And they go from resources to ultimately revenue generating tools only if you allowed them to do so. You've got to put in the work in order to do it. Like I said, if knowledge is power, and if the root of all things, if the root of all money is evil, then like I said, study hard and be evil.
I do want to say this, Mark.
Yes.
As you were talking about that, it's to the point now, like, first of all, y'all, we can't be stopped. We can't. Just as Mark said, if they're going to try to stop us, they got to stop everybody. That's number one. They're not going to do that. Two, since we all are unstoppable, that means let no thing stop you. And what I mean by that is do not let lack of knowledge stop you, because we're going through this together, right? Like we're taking it back. So don't let that stop you. Don't let like random, weak Wi-Fi stop you. You better go to one of these coffee shops. You better like increase your data plan. Like let no thing stop you. Someone else is saying, oh, I'm scared, I don't want to do this. Let no thing stop you. Negative talk, family drama, let no thing stop you. We are on a mission. So in order to be unstoppable, no thing can stop you. And whatever that thing is, don't even let you stop you. Okay, that's all in part of the no thing, let no thing stop you. And I mean this so much. I feel it like deep in my spirit. Like let no thing stop you. Even if you're intimidated by the market, do not let that stop you. Reach out to a cousin. There's too many of us now. There's too many of us. There's starting to be a groundswell. Like sparks are lighting more and more fires, more and more and more. So again, no cousin left behind, y'all. We're not playing. You see, we taking it all the way back. No excuses. Let no thing stop you.
I'm just saying, everybody was asking me for essentially like, yo, take me back to square one. Now I'm taking you back to square one. So now that you asked for that smoke, then you better make sure that you can take all of it in, because ultimately we're bringing the smoke. And the biggest thing is that I want everybody to understand is like for folks in which that are so discouraged that it says, okay, hey, once we get something, the system itself stops us. You're playing well within the system. And like I said, in order for that system to ultimately work against you, it has to work against everybody else, because you're playing the same game as everybody else. Like I said, stay ahead of the game. You're doing so. 98% of investors aren't looking at this, especially from the retail side. They're not looking at this. Institutional money is definitely looking at this, and you're putting yourself in the same category as them, because ultimately when you do that, then that's when you're playing with the money. And when you're playing with the money, then ultimately you can see how the money flows, and then ultimately you can be profitable. It's just that simple. So it's like a lot of times, many of you have been lied to as it pertains to ultimately this old methodology of how is it that you achieve wealth. Like, let's just do a simple quick breakdown, and then I gotta get off this. So let's just do a simple quick breakdown. Ask yourself this: why is it that you are supposed to do good in high school? You do good in high school because of the fact that they tell you that you do good in high school, then you can get into a good college. But what's the purpose of going to a college? So that way you can get good knowledge, so that way you can do what again? Get a good job.
Good job.
And then why is it that you get this good job again?
So you can be in bed.
So that way you can make money. And why is that you make money? So that way you can either meet the person of your dreams, and after you meet the person of your dreams, then ultimately you go ahead and like buy some real estate and everything else. I mean, that's essentially an old model, an old methodology of thinking. And ultimately it's kind of like a rinse and repeat, except for you remove the school and remove the person, because essentially you're with them for the rest of your life. And pretty much from there, it's just like, okay, well, I just keep doing the same thing, rinse and repeating, and buying this real estate and buying up land. Well, after you've done that, we've already seen exactly what the wealth transfer looks like. So it's like that rule just doesn't work. And if you think about it, if 366 million people were ultimately abiding by that same rule, then now it makes everything much more scarce and much more expensive, which can price you out. It's kind of like that methodology. Like, for example, for folks in which that are trying to understand this game, like, stocks have been around since the beginning of time, since Andrew Jackson helped start the New York Stock Exchange. So we got that part. Like I said, if you need to understand, go back and watch New York, a documentary film. It's pretty dope. It's in 6 parts, but I mean, trust me, it's worth it. But then the other interesting thing is that the options market has been around, aka stock derivatives, has been around since the 80s. So if you were born before the 80s, then technically you could have had access to it. But the thing is that nobody was coming around and checking for us in the community to tell us about this. Nobody was making the information that plain. And now they've changed the name from stock derivatives, though that it still exists out there. But ultimately, it's now options market. And now you're starting to see a lot of folks there. Now, ask yourself this: out of all the folks that are out there during the pandemic, during 2020, how many of those folks that, especially since we're seeing all these record-breaking numbers of folks that are new traders, how many of those folks look like you? I'll leave it there. I hope that you guys enjoyed the video. I hope that you guys enjoyed today's episode. If you like what you saw, go ahead and hit that like button. We would be truly grateful. If you also want to be a part of the notification squad, go ahead and hit the bell. And also, if you just want to check out some more of the content and just add it to your YouTube library, it doesn't cost, none of these things cost you a thing, except for just, a few clicks of your time. But essentially, hey, we would be totally grateful. And honestly, welcome to the Come of Cousins, and welcome to this movement. It doesn't matter where you are in your life, you can always start from somewhere, and we're welcome to have you aboard. Until next time, I'm Mark Monroe.
And I'm Jolene GC, and the place to be.
And this was Hot Take Thursday.